Right guys, so we are going to talk about market structure in this video, and everything's in the PowerPoint, so let's dive right into it. Now, I'm giving you the first outlook of Wyckoff as well in this to keep remembrance of Wyckoff, because Wyckoff comes a huge part in market structure, and I will explain this in the last point of this video. So these two slides are on Wyckoff. Now, if we cut into market structure, is the market random? Of course, right? It is. It isn't. It may seem random if you don't understand how it operates and carries out your decision. Now, again, using trading indicators, these indicators are designed by institutional traders. They restrict the movements of retail traders. They're rubbish. In a nutshell of a thing, they are rubbish indicators. I don't use them. You don't need to use them. These fancy indicators, Bollinger Bands and all of this and all of that, I don't think they work at all. So again, we go over market psychology as well. And in summary, with those two slides in summary, when buyers are more aggressive than sellers, upswings will be longer than downswings. When sellers are in control, downswings will be longer than upswings. When there's relative balance, there's no visible pattern to the swings. Market structure concepts. We have our primary, which is our long-term trend, and our long-term high, our long-term low, our secondary intermediate term trend, our intermediate term high, and our intermediate term low, and our tertiary short-term trend. So make sure you read all of these. They are there in the market. The market structure has been there for ages, and it goes back to every other price action theories, whether you trade supply and demand, you trade Wyckoff, you trade Elliott waves, you trade looking at the moon. The market structure is a key thing. Now, this is one textbook analysis I have plotted down, which is bearish order flow simplified. And on a live example, it looks something like this. You have your high, you have your low, and the 50% of the retracement, but it has to be of an imbalanced type, high to low. For instance, all of this on the higher time frame, the weekly and monthly is all in balance, and you can see the 50% is where you really ideal with the short. Sometimes you get it, sometimes you don't. And again, market structure, right? Markets are very dynamic. So generally the market trades from short-term lows to short-term highs, back to new short-term lows. So short-term low, short-term high, back to a new short-term low. This is general the concept, right? Vice versa, right? And trading with market structure, when your analysis suggests that the market is bullish, it'd be wise to think about trading on the bullish side. Let's assume, for instance, you are looking forward to a long opportunity by using market structure. Highlight short-term, intermediate, and long-term lows. Not to mention, if you missed an opportunity to go long near-term, intermediate low buying, their short-term lows, will provide many wonderful entry points with an upside aim. Again, every swing has an equal leg in price is counter trading, against in trading with sync. If a swing moves up 50 pips after consolidation, if it continues higher, expect another 50 pips higher added to the low during consolidation. Do not trade higher, anticipate a decline of 50 pips from higher made from the most recent rally. Conversely, from selling conditions, right? Pretty self-explanatory. Things to keep in mind. When the market structure is bullish, it will keep breaking previous swing highs. When the market structure is bearish, it will break previous swing lows. Hunt intermediate swings. Limit your consideration to only trading the intermediate term highs for short-term trades and intermediate term lows for long trades. And we'll skip to number 5. When the bearish market structure is broken, the market structure can shift to bullish, and when the bullish market structure is broken, the market structure can shift to bearish. Always wait for the retracement. Literally in everything I say, wait for a retracement if you've missed out. Don't rush into anything. And again, there's many more points to keep in mind, right? So I'll let you guys read that. And this is a Wyckoff wave plus market structure simplified, right? You're going to have your short-term high, you're going to have your short-term low, intermediate term high, intermediate term low, and vice versa, right? And then in between this is how Wyckoff incorporates the market structure. You're going to have your accumulations, your reaccumulations, your distributions, and your redistributions, and your markdown phases. So this is a very good way of looking at market structure as well. Now we're going to go over to, I'm going to keep this one very short and simple, and we're going to go over to like some live examples, like your higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, uptrend, downtrend. That's it. then you've got lower highs, lower lows, lower highs, lower lows, and lower highs. And again, you can see it. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, lower highs. Lower highs only happens when price break structure, then you become on the downtrend. And if you keep in mind this, you can do the same thing. Higher highs, higher lows, higher highs, higher lows, higher highs, lower low, lower highs, lower lows, etc. Right? So instead of giving you this chart, I made this chart. It's a bit more simplified with a bit more Wyckoff added to it. So there's not really much to go over market structure. For instance, it's as simple as if you look at this and you see your higher highs and higher lows, we are trending down in Europe from the longer perspective on the weekly. But how does it look on the monthlies? Let's have a look on the monthly. Even on the monthly, we've been trading upside, right? So I'm just going over, we've been trading, you have your higher highs, higher lows, higher highs, lower lows, lower highs, etc. We are trading on the downside so far, right? This is one way of looking at market structure. You can plot it from the longer perspective, like the downtrend. See, if I'm trading just purely with the monthly, there's no ways I'm looking at targets from up here. I'm looking at targets down here and etc. Stuff like that. But market structure is a very, very like simple thing to understand, and it's a very key thing to understand. Right? Everybody needs to know it. Everybody needs to understand how market structure works. It's not rocket science. And this is why I'm keeping this video fairly short. Like, I don't know much to talk about in market structure. Otherwise, then your lower lows, lower highs, and make sure you read those slides. If you get confused on anything, this is why you have the Discord, right? To help your improvement as well, and for me to guide you as well. So if you want to learn more about it and you get stuck on anything, that's where you just pop it in the Discord and be like, I need help. We can go through it. But with market structure, make sure you read all these points and understanding it. And this is like a very textbook 50% mark on bearish order flow. Same thing, vice versa. It's just the flip side to bullish. You're going to have your liquidity sweep, high time frame supply zone, SMC divergence. Make sure you read this. Imbalance created. Then price failed to mitigate the OB, but did mitigate the 50%. I've seen this many times, right? Where price just fails to mitigate any OB, but mitigates 50% of the high to the low of the range, right? So if you are trading, make sure you get your high and the low, and you highlight your 50% range, just as this. Backtest this as well if you really want. If there's an OB, even better. If not, then 50% range is one of the best places to sell in the high and the low ranges. The intermediate high and the intermediate low. And again, you can see I incorporate a bit of Wyckoff. We're keeping this as a sign of weakness, indicating more weaknesses to come in the market. And any more questions on this, feel free to give me a text or ask for any help, and we'll go through it. But guys, make sure you read all the slides. Thanks for watching.